A very good afternoon to you. Let's take a look at the markets. Asian markets were mixed in today's session as U.S. Treasuries had been sold off on the back of worries around higher debt levels in the United States. For the week, the MSCI broadest index of Asia Pacific shares made a loss of 0.4% after 5 straight weeks of gains in the weeks before. The Nikkei share average closed up 0.5%. The Hang Seng index ended the session flattish, that is up 0.077%. While the Shanghai Composite Index closed the day down 0.94%. All right, on U.S. markets, we saw that those fluctuated between gains and losses during yesterday's session, ultimately closing mixed. This as investors tried to digest the implications of the passing of President Donald Trump's new tax bill, with the House of Representatives only narrowly voting in favor of it by just one vote, in fact. The move is expected to lift the U.S.'s debt by trillions of dollars. The Dow Jones Industrial Average ended flat. The S&P 500 closed down 0.04%, while the Nasdaq Composite Index rose by 0.3%. Taking a look at local indicators, we see that the all-share index is up currently 0.7% at 93,846 index points. On the currency front, we see that the rand nicely firm there at 17.89 against the US dollar, 20.32 vis-a-vis the euro, and 24.15 against the British pound. In terms of commodities, we see that gold is trading at $3,327 an ounce, platinum at $1,087 an ounce, while Brent crude oil is at $64.31 a barrel. All right, let's get into a discussion with Warwick Lucas now. He's the head of private clients at Vunani Securities. Thanks very much, Warwick, for joining us. So yesterday, the U.S. House of Representatives voted on President Trump's tax bill, and it was passed through by a mere one vote. It's going to be cutting taxes massively, but it's also going to be taking away the social safety net programs as well, which no doubt is very problematic for ordinary Americans who are also battling the higher cost of living. And worse still, it's going to extend the US's already massive debt by another $4 trillion or so. And clearly the markets have reacted negatively to this, more so specifically on the debt market, the bond market. Tell us more about that.
Yeah, so obviously it's a very involved bill. I mean, the fact is that in order to get it through by an extremely slim margin, I mean, one vote in a House of 429 legislators, you had to have all kinds of trade-offs to get it through. I mean, you know, getting to the point where one state needed certain exemptions in relation to the taxation of tanning clinics. So yeah, there's obviously a lot of trading off to get that through. Now, just because it's gone through Congress doesn't mean it's law. It's basically now got to go through Senate. And that's a process in itself. I mean, Senate basically, yes, it can pass on 51-49, but there's a process called filibustering in Senate, which means that you can drag things out endlessly through demanding debate. So you can debate it until the cows come home, and the only way to get around that is when it is purely a budgetary issue. So then the fight in the budget goes to, or sorry, in the Senate goes, well, yeah, is it just a budget issue, or does it run deeper? So this is going to be quite an involved punch-up. So yes, they are hoping in the Republican Party to have it on Trump's desk by the 4th of July. It's going to be quite interesting as to whether they can actually do it. Quite obviously, the bond market doesn't like it. We've seen those bond yields weakening anyway, although I suppose one could debate, well, is that because they're getting downgraded by more rating agencies, or is it inflationary concern, or is it a combination of them? Well, I suppose a combination would be the answer, because there's certainly it is expansionary. If the trade-offs or the earnings from tariffs don't come through, which they won't, then you've got to raise borrowings, and ultimately that's potentially inflationary and obviously expansionary on the fiscal side.
Yeah.
So it's no surprise the bond market didn't like it.
So Warwick, for South Africans who are watching, who say, so what? What does it mean, if the US bond market is not faring very well? What does that mean for the rand? What does that mean for us South Africans?
Well, I mean, it's quite involved on a number of levels. I mean, an unstable US is actually not that great for the world. And I mean, the US is probably the primary capital market in the world. So if cost of capital goes up in the US, kind of spills over everywhere. Obviously, there's a positive in the sense that, well, we're somewhat of a mining economy, but mining ain't what it used to be for South Africa. I mean, I think we only just sneak into the top 10 in gold producers. So the benefit to us is marginal. So it's not like we should be cheering at their misfortune, as it were.
Yeah.
Net it's something that frankly we prefer was resolved positively rather than negatively.
Warwick, there is so much that I want to talk to you about, but we actually don't have enough time. But I must ask you about this issue that the government or the Minister of Communications, Solly Malatsi, has put out a gazette basically saying that he's directing ICASA to adjust or relax the BEE provisions in relation to service providers who are going to be providing particularly satellite services. That kind of hints at the possibility that Elon Musk's Starlink could be here in South Africa. That's so efficient, given that South Africa and the US just met a couple of days ago. What are the implications of this if this does happen? Because people have been saying it's important that we don't bend on our sovereignty and on our laws in order to ensure that someone like Elon Musk gets to invest. But also on the other side, him investing in South Africa with Starlink would also be quite positive, right? But it's also negative as well for our existing telcos because that would be competition for them.
So yes and no about competition. I mean, the whole point of Starlink is that it provides access to areas that otherwise couldn't have access. I mean, Starlink is necessary in areas where you can't get access currently. I mean, it would be in remote areas where quite simply you've got a school or police station or other very useful and important community center has got a choice of either Starlink or nothing. It's not about suspending your principles or the almighty buck ruling or whatever, or we're throwing away principles. You have a choice between rigidly enforcing a BEE legislation in this particular case, or having these people who are quite frankly marginalized with our society coming to join us within our society. So you're not suspending principle or pragmatism. Yes, there's a lot of ways that this debate can be expanded further in what we do about business in general, pragmatism versus principle, the future of BE, etc. But in this case, we're allowing people who are marginalized to join our real economy. There's nothing bad about ICON-C, and to be honest, to say otherwise would be to spite them.
All right, Warwick, we're going to leave it there. Like I said, it would have been great to speak to you about Sibanye and a lot of other things, Budget 3.0, but we just don't have the time. Thank you so much for your time and insights, as always. That was Warwick Lucas. He's the head of private clients at Vunani Securities.